suspect many investors will be thrilled to see 2008 come to an end. It has been an historic year for the markets, the economy, and the country. Greg Clarkin now takes a look back at the year during which the landscape of Wall Street was altered.
Looking back, it all seems so mild now. Will there be a recession? That was the big question a year ago when the debate centered on the slowing economy. Now, a year later, the questions are how long will the recession last and how bad will it be? As the year closes out, investors around the country and the world have been shocked by the bursting of the housing bubble and the fallout from the credit crisis. And the landscape of Wall Street has been altered over the last 12 months like few could have imagined. For starters, Bear Stearns doesn't exist anymore, the legendary Wall Street firm done in by bets on subprime mortgages. That was back in the spring, and it was a sign of things to come. Throughout the summer, the housing market kept sinking and foreclosures kept rising. Home equity loans dried up, cutting off the flow of easy money that Americans had become accustomed to. And credit of all types became increasingly hard to get. As the year progressed, consumer spending fell as cash-strapped shoppers cut back. Washington tried a quick fix, pushing through an emergency stimulus package in the form of tax rebate checks to 130 million Americans in the hopes they would go out and spend the money. And many did, but the spending provided only a temporary boost to the economy, and consumer spending fell again. In the fall, the economic downturn really took hold. In a dizzying span of hours, Lehman Brothers collapsed, Merrill Lynch sold itself to Bank of America, and AIG had to be rescued by taxpayer money in a bailout by the federal government. And weeks later, Citigroup needed government money to save itself. After rescuing Wall Street, Congress debated helping U.S. automakers, and through it all, the housing market continued to slide. Prices kept falling, wiping out equity and buying power and battering the slumping economy. The year was also one of the weakest in decades for the labor market. More than 2 million jobs were cut in the first 11 months of the year, and tens of thousands more were announced in December. And the stock market provided no relief as Wall Street's biggest names crumbled, so did the markets. On Wall Street, a pattern of eye-popping losses, then staggering gains took hold. The Dow started 2008 at 13,264. At one point in November, it plunged to close to 7,500.
With the new year, there's new hope that the economy and markets will stabilize. The Federal Reserve has stepped in with its most aggressive action ever, cutting its target on interest rates to zero and vowing to do whatever it takes to get banks to lend to businesses and consumers. And if successful, well, the new year should be a better one for investors. Greg Clarkin, Business Week TV, New York.